What's going on, guys? It's Tremaine here, the most disciplined day trader on YouTube. Here is the trade I took on stream in Discord this morning. So shorting that fair value gap, targeting the low of our current new week opening gap. My stop loss is just above that entire range of the fair value gap. And I'm telling the group that I'm looking at that inversion fair value gap there. This is live funds, my live account, personal funds. And I'm looking for sell side. You see I have that 830 opening price labeled there. We have relative equal lows there as well. And we sat through, well, let me not say we. I sat through a lot of drawdown in this trade. But so far we're respecting the lower half of that inversion fair value gap. So everything in this trade still looks good. And I'm risking kind of light today. I didn't want to risk my full $700, $800. And I'm going to manage my stop a little bit more aggressively. I'm telling the chat that I would prefer for that fair value gap to stay open. And I'm lowering my stop above the high of that inversion fair value gap. And I'm looking at those two up close candles, trying to get a feel for price. Okay, that's a bearish order block. You see the reaction off of it. And NASDAQ here is being a little stubborn, trying to get to the sell side. This is a, well, you'll see later in the video, this is a perfect example of a high resistance liquidity run. So started off risking around 600 bucks. Now I'm risking around 500, just shy of that. So trimming my risk ever so slowly. You see we reached the bearish order block again. Now those two up close candles, that makes one bearish order block, but you're going to see me outline it here in just a little bit. That very last up close candle right there, that's an order block in itself. That's how ICT teaches it. So price is trading up into that as well. So your two up close candles is one entire complete order block, but the last up close candle in itself is a bearish order block. So we're back near my entry, and I'm drawing that out there up around 150 bucks or so. So that's the sell side I'm aiming for, those relative equal lows that I just annotated. So we're trading back to that inversion fair value gap. And at this point, everybody in the chat room is pretty much sweating bullets. I'm giving myself a pat on the back for even holding the trade this long. Most of my trades don't have this amount of drawdown and retracements, but this is exactly what a high resistance liquidity run looks like. Deep retracements. It's just being really reluctant to go lower. But submitting to the trade idea, I've already done my job as a trader as far as going into today's trading. We have a lot of tariff stuff going on, Trump speaking and whatnot, so I'm already coming into today's session with the understanding that risk is elevated. Brokers sent out statements saying margins have been reduced and all that stuff. So I've already trimmed down my stop loss a little bit, shaved that down. So I'm not really concerned about closing the trade. I was hovering my mouse over the manual close button just in case NASDAQ was showing signs that it didn't want to do what I want it to do. So trotting down ever so slowly. And then you see here I have my trigger finger on the close button. And I'm really just watching to see if we respect up close candles, if we can continue to make lower highs. That's what my eyes are focusing on here. So as long as we keep making lower highs, then I think the trade is good. But if we start breaching up close candles and it's just being very reluctant to go lower, then I'll just have to manually collapse the trade and protect my stop. Let me know in the comments, would you hold something like this? I'm just curious. Would you have closed it, or would you have, what would you do in this situation if you were me, sitting in that deep retracement when it's retracing almost less than 2 points away from your stop? So my stop is moved to break even, and I'm highlighting that fair value gap. Ideally, if we're bearish, I want to see that fair value gap stay open, treat it as a breakaway gap, so my stop is above it. Currently up around 300 bucks. So you're going to see me draw out that inefficiency in just a little bit. And I'm also taking a partial, so I'm planning on taking 5 micros off at the sell side, those equal lows. Nothing right here is worth taking a partial in my opinion. Again, I opened the trade risking 600 bucks, so taking something off here, I'd rather just have my stop at break even and give the trade a chance to pan out. It's not worth peeling something off here. So just notice how just stubborn and real, it's being very just hesitant. There's not really a clean, sustained price run lower. It's a lot of wicks, a lot of back and forth. But at this point in time, the risk is removed, so there's no fear, there's no anxiety held through the drawdown and the retracement. So that displacement, that's nice. That's what we look for. So up around 500 bucks. Aiming for around 1,000 to 1,500 on the day. I should be able to still make that with my partial. Lowering my stop just a little bit, have to cover commissions and whatnot because this is a personal account. So 15 micros, you have to pay a couple bucks on that per contract. Okay, it's not free to put on a trade, so making sure if my stop does get hit. So if you have your stop loss right at your entry price, if your stop gets hit, you actually lost money on that trade, because if you're trading a live personal account, not a prop firm, but a real regulated broker, you just pay commissions on 15 contracts, and if you didn't count for that when locking in profits, then you just lost. So just fell short of my sell side objective, retracing back up, and I'm highlighting some inefficiencies on the 3-minute and 2-minute chart there. So we're still leaving the upper half of that red fair value gap open, which is nice, getting some nice displacement lower. And now getting some displacement higher. I mean, this was a really tough hold, I'll be honest with you. There's very few trades where I just have to babysit it. And you can see it takes my stop there for about 30 bucks. And there, my original target was tagged, just including that footage in there. And then you can see the low, the new week opening gap, which was my original draw, almost hit beautifully before we reverse at the opening bell. So it's just one of those days where it was a brutal hold. The draw on liquidity was right. Everything was right. Stop loss management, I don't think could have been any better as far as accounting for the risk. It happens. So this is the reality of it. Still haven't had a red day in a while on stream, but I'm still looking for that solid, good trade where it's just get in, get out, and I don't have to babysit it as much as I did today. But hopefully you all found some insight in this. I know it's not much, but that's today's trade today. I'm giving myself a little pat on the back for even holding that trade, because that was a killer right there. That one was brutal. I'll be honest with you. Even for me, even for the most disciplined day trader on YouTube, that was a tough cookie. So Discord members, I'll see you all back in the stream same time tomorrow at 8:15. Everybody else, I'll see y'all when I see y'all. Peace.